The following program was produced by an independent community producer. The opinions expressed do not necessarily reflect those of MCAM's staff or board of directors. MHTV, in compliance with FCC regulations, is prohibited from exercising control over the content of independent member-produced public access programming.
Hello, this is Ned Williams. Welcome back to MHTV's Fixing Everything series. In this final presentation, I will summarize my suggestions for fixing the federal government. Over the last 10 years, both political parties have made a mess of their opportunities, so it's time for us to provide balanced solutions for you. Our first proposal will goose the stock market by about 5,000 points, and you will have time to participate. The ante to play is a painless tax. Not only will these revenues create a one-time budget surplus, but we should be able to knock close to $1 trillion off future entitlement liabilities. Having completed this first big step, the current tax code goes in the trash. Our new tax code will be integrated with 21st century safety net that replaces deductions and corrects our abysmal record on promoting upward mobility. Implementing this integrated tax and safety net should boost economic growth by 1.75% in efficiency savings. The nanny state will be eliminated. In its place, citizens will take responsibility for their own actions, resulting in drastic reductions in crime. Next, we take on the third rail of politics, entitlements. Over a 30-year, three-step process, support for seniors will fully reflect changes in demographics while honoring existing commitments. Finally, discretionary spending by Congress will be capped voluntarily by legislators with a big carrot. I've bitten off quite a bit for a half-an-hour program, so let's get started. Our first step is to eliminate the following investment taxes: capital gains, dividends, inheritance, and gift. But without paying my Painless tax as a ransom, there's no way to free investment value. This Painless tax will be like paying taxes on a winning lottery ticket. Eliminating dividend and capital gains taxes will send stocks soaring by around $6 trillion. Everyone will get to share in this lottery prize. However, to replace lost revenues, a one-time tax on all accumulated gains will move forward future tax revenues into the current year. This tax should raise about $1 trillion, or 5 times annual investment tax revenue. Now, why will the market go up 5,000 points? Obviously, many factors affect prices, but this part is straight math. For example, with a 20% dividend tax, a $1 dividend is only worth 80 cents. With no tax, the value of dividends and stock ownership will go up by 25%. Note that some of the rise may already have taken place in anticipation of a tax reduction from Trump's stalled tax plan. This will stimulate the entire economy, since the stock market is viewed as a barometer of economic vitality. Net worth will increase for investors and business owners. Growing companies will raise new capital at reduced cost. Pension funds, currently in deficit, will get a bailout from the market surge. International and offshore capital will come pouring into the U.S. This tax will be painless for 2 reasons. First, stock market value will rise far more than the tax. 2, citizens will have the option to apply future Social Security benefits as part of their tax payment. So unless accumulated gains exceed $1 million, they will have no out-of-pocket cost. Now that we've added 9% to private America's net worth, let's fix the rest. Our new tax plan will be efficient, transparent, and fair. Currently, tax compliance in the U.S. requires an incredibly inefficient 7 billion man-hours. If we can cut compliance time in half, and that should be easy, we will add the equivalent of 1% very productive citizens to the workforce. Theoretically, the most efficient tax would be a tax on sales. But, as Yogi Berra once said, in theory is the same as practice. But in practice, it's not. There is a huge practical problem, which I call the phantom tax. If you eliminate the personal income tax, the tax may be gone, but the cost remains to haunt prices. For example, if John makes $100,000 and pays $25,000 in taxes, his services can now be provided based roughly on his gross salary of $100,000. If the income tax is eliminated, he still makes his gross pay of $100,000, but then the tax must be tacked on top. Proponents of the fair tax estimate the inflationary bump from changing from an income tax to a sales tax will be 24.8%. Totally unacceptable for those on fixed incomes and for those with low incomes. But why is a single flat tax rate more efficient than progressive rates? With no taxes on investment, employers can file accurate annual tax returns on behalf of their employees based on a straightforward X percentage tax times gross income. No more tax filing for a majority of citizens, not even a postcard. Would you be more productive if you could avoid filing taxes completely? In the future, the IRS will deal only with businesses and those individuals with business income. A flat tax on all income will bring the top marginal rate from the highest international corporate rate down from 35% to 25% and reduce the top individual rate from 39.6%. This proposal is revenue neutral. However, real gains will occur when the tax burden is reduced, since the taxes are embedded in the price of every product we buy. With the economy growing faster than government spending, tax rates can be further reduced, lowering prices, stimulating further growth, and again lowering tax rates in a continual virtuous cycle. Our new code should never create effective tax rates above the flat rate for anyone. However, under the current code, when loss of safety net benefits isn't considered, those with the least often face the highest effective rates, blocking their attempts at upward mobility. For example, my brilliant quadriplegic nephew receives between $60,000 and $70,000 in medical and disability support. But if he makes even a modest amount of money, he risks losing that support, which for him could be a death sentence. If he could just pay a flat rate on whatever he earns, he could contribute both toward his own care while making a significant contribution to society. Should his effective tax rate ever be higher than those making millions? Obviously not. Okay, the flat tax rate is effective and is efficient and transparent. But is it fair? Yes, it is fair in the sense that all are treated equally. But unless something can be done to lower the effective tax rate for those with lower incomes, a flat tax is a political loser because it benefits the rich and hurts the poor relative to the current code. My suggestion for adding progressivity is an unconditional basic income, also called a UBI, for all citizens. This monthly cash payment can be distributed electronically to individual accounts, so collection efficiency at business collection points is retained. Payments are unconditional in that there is no link to income earned. UBI payments will replace part or all of our horribly inefficient federal welfare and other safety net programs. While maintaining current support levels, we can eliminate the costs for 700,000 welfare bureaucrats. Waste and fraud that sometimes reaches as high as 30% in some programs will be eliminated. Other safety net programs, including unemployment, disability, Medicaid, Medicare, Social Security, and Obamacare subsidies, can be reduced dollar for no net change, thereby reducing disincentives. For those earning income, a UBI replaces the standard deduction and all tax preferences, and I do mean all tax preferences, making effective tax rates far more progressive than the current code. Basic income plans and proposals come in many varieties, from a highly successful Kenyan plan of only $22 a month to an unsuccessful Swiss referendum at the extravagant level of $2,500 per adult citizen per month. To find an appropriate level for the U.S., let's step back and look at what we as a society believe. Many on the left believe that wealth should be redistributed to equalize incomes. Many on the right feel that redistribution is theft, destroys incentive to work, and the less fortunate should be cared for through voluntary charity, or at worst, government work programs. Both positions are untenable because they are extreme. Total redistribution has never worked, with Venezuela as our current example. While excessive redistribution, the EU, results in slow growth. Charities cannot effectively replace current safety net programs in any reasonable time frame. Work programs would create another government-run boondoggle, and political reality demands that current levels of support be maintained. But how do we hit a Goldilocks sweet spot and keep it there? The U.S. situation presents a unique opportunity since there are three separate sources of support: federal, state, and charities. There is almost universal support for the idea that no U.S. citizen should live in poverty. So the ideal sweet spot for the federal UBI should be the federal poverty level. With the federal government providing poverty level support for all, states and charities can focus on individual circumstances. Blue states can be free to augment up to current levels. Red states might transition to private charity for support beyond poverty levels. The federal UBI is not intended as the sole means of support for those with special needs. However, it's definitely intended to replace our convoluted attempt at progressivity within the tax code. All citizens in good standing will be lifted up to the poverty level. all citizens will receive the same dollar amount and face the same federal tax rate on earned income, and everyone pays back some or all of their UBI at the same low rate. The UBI has three goals. First, it provides full or partial replacement of existing federal safety net programs with no net loss of benefits and no disincentives on earning income. Second, the cost of the standard deviation and current tax preferences for the wealthy will be instead spread equally to all income earners. Third, the tax code can no longer be manipulated to favor individual businesses, citizens, or special interests. Legislators and lobbyists will push back on this one, but should be overwhelmed by widespread support. Distributed monthly, the annual UBI amount will begin at $10,000 for citizens above 21 and $2,000 for those under 21. A family of four will receive $24,000 to match the federal poverty level. A single-parent family with two children will receive $14,000 plus $2,000 for each child from the absent parent's UBI, for a total of $18,000, again matching federal poverty support. While a single individual will receive less than the poverty level of $12,000, it's assumed that expenses can be shared with others, while single seniors will still have Social Security support. Legal immigrants and working citizens under 21 will receive tax rebates up to the UBI amounts for income earned. We want to continue to be the land of opportunity for legal immigrants who contribute to our society, yet discourage immigration for those who just want a handout. This will end the nanny state. Individuals will take personal responsibility for their own welfare and actions. No longer will a government be looking into private activities. However, in the future, someone convicted of a felony will be responsible for legal fees, court costs, incarceration costs, and restitution out of future UBI payments. With huge potential losses to felons for criminal behavior and criminals paying a substantial portion of their incarceration cost, the cost to society for criminal behavior will drop far more than the current annual incarceration cost of $60 billion. Finally, consider how fair this system will be. Everyone faces the same tax rate on income. Everyone, given adjustments for family size, receives the same UBI. And yet the effective tax rate is far more progressive than the current code. This graph is federal only. Let's add some perspective with what happens now. In Massachusetts, combined federal, state, and charitable support is around $50,000 for a single woman with two children. However, by the time she reaches $60,000 in gross income, she's paying taxes and all of this support has been lost for an effective tax rate over 100%. These losses come in huge chunks. Food and housing are lost at $30,000, child care lost at $42,000. These so-called benefit cliffs are in effect large stop signs forcing recipients to stop earning money. Would you earn an extra $1,000 if your loss of benefits was $10,000? Here's the cost per welfare recipient when $50,000 to pay overhead costs of 700,000 welfare bureaucrats is allocated. And if we include an allocation for fraud and waste per individual, the starting point is higher still. Fraud and waste in safety net programs often is as high as 30%. UBI recipients must submit a fingerprint to avoid multiple payments. Penalty for UBI fraud is permanent loss of UBI plus jail time. States will also need to revise their approach, but let's get our federal programs straightened out first. Now, what is the financial impact? This compromise proposal is revenue and expense neutral. Instead of spending cuts, we plan to cap spending at current levels while stimulating economic growth, thereby growing the economy faster than government. UBI support will be inflation adjusted, capped by population growth of 0.9%. Entitlement commitments should achieve negative growth after we get through the current baby boom bulge. Discretionary spending will be capped at 1% growth using a legislative carrot, which will be described later. Economic growth will be stimulated by at least 1.75% through program efficiencies. National debt will continue to increase, but decrease relative to the size of the economy, keeping interest costs in check. The proposed UBI will initially cost $2.3 trillion. It will be fully financed by replacing $0.9 trillion of current safety net programs and by eliminating both the standard deduction and so-called tax expenditures of $1.4 trillion. Two-thirds of tax expenditures currently go to the top 30% in income, who itemize deductions. Instead, those funds will be spread evenly over all income groups. Pro-growth tax proposals help everyone, but predominantly those at the top. This UBI makes effective tax rates more progressive than the current code, thereby providing political balance, so economic gains will be shared by all. What about health care? Out of the $10,000 UBI, $3,000 could be deposited in the health savings accounts to be used only for health care needs. This amount is less than what the federal government currently spends on health care deductions, ACA support, and portions of Medicaid and Medicare. All citizens will have funds to purchase individual catastrophic insurance in a free market. At 25% flat tax rate, the $6,000 family health savings allotment is far better than a $24,000 health care deduction, since it allows the family flexibility to buy only coverage they require over the $6,000 base. Government will continue to support those with pre-existing conditions. When everyone receives health care support from birth, uncovered pre-existing conditions will eventually disappear. Okay, we need a fluid workforce that can rapidly adapt to changing conditions such as automation and international competition. Lifetime employment is no longer a functioning model, yet our healthcare and pension programs continue to be company-based. Elimination of corporate deductions for healthcare and pensions has been offset by our 21st century safety net, which supports individuals directly. With businesses no longer funding corporate FICA, healthcare, and pensions, salaries should rise by these programs' pre-tax cost. Social Security, way out of whack with current demographics. When Otto von Bismarck first established social insurance, In 1889 in Germany, retirement age was 70. However, at the time, average life expectancy for those surviving childbirth was only 48. Now we have full retirement age at 66, with life expectancy fast approaching 79. Originally, we had 16 U.S. workers supporting one retiree, but recently that ratio has dipped below 3 workers. Our system of transferring funds from worker to retiree is no longer viable. So we must shift to a system of individual retirement accounts, like the successful programs of Chile, Singapore, and Hong Kong, who are also suffering lower birth rates. Elimination of FICA payments through the 25% flat tax on gross income offers a migration path out from under future entitlement commitments. Current retirees have fulfilled FICA payment requirements and are fully vested in Social Security and Medicare benefits. However, those who've not reached full retirement age are only partially vested and should expect a proportional reduction in future benefits. Every dollar not paid out in entitlements is a tax dollar not collected. And since that tax dollar does not have to be added to the cost of products and services we buy, prices will fall and take-home salaries will rise. Since the average individual works approximately 45 years for 15 years of payout, it's logical that for every month short of current full retirement age, they should lose 1/3 of a month of benefits. This can be easily adjusted by pushing back new retirement dates by 10 days for every month until the current full retirement age. First-year expenditure reduction will only be about $12 billion. However, current value of future liability reduction is $700 billion. Every dollar not paid out is a tax dollar that does not need to be collected. Gradual implementation will provide enough time to change savings and retirement patterns, but regardless, every citizen can count on the UBI, whether retired or not. It is recommended that all employers, to fix our current liability problem, convert from defined benefit payouts into individual retirement accounts with a one-time contribution. Conversion to individual retirement accounts will also alleviate the pension crisis. Those employers whose pension plans are in deficit will need to recognize or adjust the deficit amount and create payment over time solutions. With pension contributions no longer a tax deduction for employers, salaries should increase by pre-tax contribution amounts, thereby providing a source for Roth-style retirement savings. Discretionary spending. Having capped mandatory spending, which is 70% of the federal government's non-interest expense, we must address increases in discretionary spending, the other 30%. Rather than an artificial cap with no teeth, I propose a carrot rather than a stick. Until now, most political benefits come from increasing spending rather than spending restraint. Therefore, I propose an annual spending bonus of 2 times legislative salaries if discretionary spending is limited to less than a 1% increase over the previous year. This discretionary spending congressional bonus could cost about $250 million annually, but would insert a voluntary cap on $1.1 trillion in discretionary expenses. Since any increase in the UBI beyond the inflationary adjustment will be considered discretionary, such increases will be budget busting, and future bonuses would necessarily be permanently eliminated. This provision will maintain the UBI at the poverty level sweet spot. There will always be exceptional circumstances like war, environmental calamity, or recessions that might cause discretionary spending to bloom. However, this bonus is intended only for those periods when spending is held in check. As a side benefit, we would eliminate unnecessary wars. To review, investment has been unleashed to drive future growth, made politically palatable by our painless tax. Pension deficits have been addressed by the elimination of taxes on investment and conversion to individual retirement accounts. Safety net programs have been integrated with a tax code to encourage upward mobility and dramatically simplify both processes. Entitlement liabilities will be wound down with enough breathing space for conversion to individual retirement accounts, supplemented by the UBI. National productivity should be boosted by at least 1.75% through tax compliance savings, public workforce conversion to private purposes, and elimination of disincentives for those receiving support. Real mandatory spending increases will be less than 1%. Discretionary spending will be voluntarily capped at 1%. Not including interest on the debt, growth in total federal expenditures should stay below 1%, a low bar for our economy to beat. Federal debt should grow slower than the economy, keeping a lid on interest rates and allowing future reductions in the flat tax rate. Other than legacy safety net support, the federal government will treat all citizens equally. States and charities will address individual needs not covered by the UBI. 20th century programs must be left behind. Future challenges are already here, and we must provide citizens with resources and incentive to adapt. Well, that's it. I hope you've enjoyed this discussion. You can find this and other MHTV videos on YouTube by searching Fixing the Federal Government. That's Fixing the Federal Government. Group self-insurance, healthcare, and less reasonable pays tort reform solutions, which we did not have time to discuss today, are discussed in videos number 4 and 5. Please link these videos to your friends and any influential people you can. Thanks for watching.
The preceding program was produced by an independent community producer. The opinions expressed do not necessarily reflect those of MCAM staff or board of directors. MHTV, in compliance with FCC regulations, is prohibited from exercising control over the content of independent member-produced public access programming.